How's it going, everyone? This video will be covering SMT divergence and everything you need to know around SMT divergence. This is smart money tool or smart money technique. Now, in this video, I'm going to share with you how do you spot SMT correctly, what are the actual correlated pairs. I'm going to share with you when you should be looking for smart money technique. How do you apply it to a trading model? I'm actually going to break down trades that I've taken live in front of the mentorship members. So if that is something that you're interested in, stick around because this is going to be a good one. What is SMT divergence? SMT divergence is smart money technique or smart money tool. SMT divergence is a trading concept that compares the price movements of related assets like Euro USD and GBP USD to spot discrepancies. When one asset makes a higher high or higher low while the other asset does not, this divergence can signal a potential trend reversal. It is a crack in correlation. It's a way that we identify where smart money may be positioning the market. So like I've mentioned here on Euro USD and GBP USD, these are correlated pairs, correlated assets. Now, here we have Euro USD and over here we have GBP USD. Here you can see we are in a downtrend in Euro USD. We have lower lows, lower high, lower low, lower high, lower low. But on GU, we also have lower low, lower high, lower low, lower high, but then we have a higher low. If the pair is correlated, we would expect GBP USD to also come down and make a lower low, but it doesn't. This is a crack in correlation, and this is known as SMT divergence. Also, when we have a high down to a low, up to a higher high, higher low, and then we have this, compared to when we have this. Here we can see, here we made a higher high, but here we made a lower high. That is also SMT divergence. And it shows you a cracking correlation and that there's weakness entering the market. So, which one of these two will be the weaker asset? It is going to be GBP USD because Euro USD, the trend was strong enough to push down, creating a lower low, where GU wasn't strong enough to create a lower low. If you are serious about taking your trading to the next level and actually see real profit from the market, I highly recommend that you enroll in the mentorship program. This isn't just another course. This is an actual mentorship where I walk with you every single step of the way. We are running a promotion at the moment where you can save 20% on lifetime access, but this promotion ends at the end of November. So use code WELCOME20 at checkout to secure your 20% discount. You can learn the exact models I use to get funded 400K and was able to fund my personal account so I can trade full time. You can choose between a monthly or lifetime membership, whichever one works best for you. You get access to me and to a private Discord community. If you are struggling to get funded, you can join our live trading sessions every single day. Every single day throughout the week, I stream my trading live and I answer the members' questions live, explain everything to them live. I do everything live. There's no hindsight, no fake news, nothing. Everything is done in real time. And if you don't want to take my word for it, just take a look at what the results are so far with the mentorship and the members inside of the program that are absolutely killing it. So if you are looking for a no-nonsense approach to trading education, this is the place to be. Are you ready to take the leap into professional trading? Here we have an example of SMT divergence. On the left, we have GBP USD on the 1 hour time frame. On the right, we have Euro USD on the 1 hour time frame. Now, if you play price forward by one candle, you can see that on GU, we have a lower high, but on EU, we have a higher high. Let me zoom in so that you can see it clearly. There we have a lower high. And over here, we have a higher high. Now, which one of the two will be the weaker pair? It's going to be GBP USD because we didn't have enough strength to sweep liquidity. where Euro USD had enough strength to sweep liquidity. So you can go ahead and play this forward, and you can wait for a change in the state of delivery on GBP USD, and there you also have a fair value gap that is formed here. Let's see if we get a tap into this trade. The market runs up, taps into the trade, and let's wait to see how this trade plays out. And there you go. The trade plays out. Both of the trades would have played out, but you can see here, because GBP USD were the weaker asset, EU still had enough strength to run up. So if Euro USD would have stopped you out on this position, that is why it is important to only trade the weaker of the two pairs. So now that you've seen that example where I used Euro USD and GBP USD, what are the actual correlated pairs? We have ES and NQ, Euro USD, GBP USD, Aussie dollar, New Zealand dollar, USD CAD with the DXY dollar index, dollar Swiss against dollar index, Euro JPY against GBP JPY, and we have gold against silver and Bitcoin against Ethereum. These are correlated pairs. So what that means is if ES makes a lower low, I'm expecting NQ to make a lower low as well. But if ES has made a lower low and NQ doesn't, that is a crack in correlation, and it shows me that NQ will be the stronger pair for buy position. Now, the same story. If dollar CAD makes a lower low, but the dollar index doesn't, this is the weaker asset, and we trade the weaker asset. If gold makes a higher high, but silver makes a lower high, which one of the two will be the weaker asset? It is going to be silver, because silver didn't have enough strength to sweep liquidity. So this will be the one that I will be selling when compare it to gold. In this example, I'm going to be breaking down a trade that I took live in front of the members. I shared the analysis live. I started the charts up live. I broke down from the higher time frame live. From higher time frame analysis to execution, everything was done live in front of the members. So if that is something that you want to do, if you want to trade live with me and have me review your trades, have me keep you accountable with your trading, have me help you with your backtesting, have me help you with your psychology and your risk management, go check out the mentorship in the description below. It is an absolute game changer. So moving on to the trade that I've shared live with the community is I started with dollar CAD, and we have on the left we have dollar CAD, on the right we have dollar index. Now these are correlated pairs. If dollar CAD makes a higher high, I'm expecting dollar index to make a higher high as well. Now, what can you see here? Here you can see that dollar CAD made a lower high when dollar index made a higher high. What does that mean? It means we have a crack in correlation. So here we have SMT divergence. After I saw this SMT divergence, I said to myself that which one will be the weaker pair? The weaker pair will be dollar CAD. So focusing on the dollar CAD, we have this SMT, then dropping to the 5-minute time frame, because price action also traded into what? We traded into this volume imbalance, which is a very strong draw of liquidity. After we trade into a volume imbalance, it is very likely that price action will reject it and move lower. So here you can see, here we have our SMT and we have Asia session. So I was waiting for Asia high to get swept. So I waited for Asia high. Asia high gets swept. So what can we see here? Here we can see we have a very clean order block that hasn't been mitigated yet. Entry limit order at the order block, stops at the high, and targeted this swing low. We can also go ahead and target this order block, this down close candle, because it's unmitigated. And I just simply play price forward, and we can see quick 3-to-1 R trade. Here is another example of SMT divergence. We can see GBP USD made a higher low while Euro USD made a lower low. In this example, I'll pick Euro USD to trade because we have swept liquidity after a very big impulse move down. So, with GBP USD being the stronger pair, we can see that GU gave us a change in the state of delivery. And you can take an entry on the retest of this order block, stops below the low, targeting a straightforward simple 2-to-1. You can see price action comes down, hits the order block, runs up, hits your take profit. While Euro USD came down, and there's no fair value gap, there's no PDA rate to enter off of. On Euro USD, we do in fact have a change in the state of delivery with these 4 consecutive down close candles being closed above. Price action then comes, retests the order block, stops below the low, and we can also go ahead and target a 2-to-1. We have another retest of the order block, and price action starts running up, and we get taken out. Price action takes out our position for a 2-to-1 gain. In this example, we have NASDAQ on the left and S&P 500 on the right, and we can see that NASDAQ gave us a lower low, while S&P 500 didn't make a lower low. We have a higher low. So giving us an SMT divergence. Which one of the two will be the weaker pair? It is going to be S&P 500 because we didn't have enough strength to sweep liquidity. So if I'm buying, this will be the pair that I want to be buying. Now that I know which one I prefer out of the two, I can start framing a trade. Now we have 2 consecutive down close candles, so we can wait for price action to close above, giving us a valid change in the state of delivery. We simply wait for price action to close above. Now here you can see that S&P 500 gave us a change in the state of delivery, but NASDAQ didn't. NASDAQ still has to close above, validating our order block. So we have more momentum to the upside with S&P 500. So now think about this. This is the weaker downtrending pair because we didn't have enough strength to sweep liquidity. We have such an injection in bullish momentum that we close above down close candles, making it a valid order block, where NASDAQ didn't have that same amount of volume to give us a change in the state of delivery. So what I can wait for now is either a retest of this order block, or I can simply go ahead and wait for a retest of a fair value gap, stops below the order block, and I can target these swing highs. And there you go. Price action comes back, hits the fair value gap, and runs up to hit this high. And here you can see, what do we have again? We have SMT divergence. S&P 500 gave us a higher high, while NASDAQ didn't. So if I line it up, it is this high down to this high. Which one of the two will be the weaker asset? It is going to be NASDAQ. So I'll be framing a trade on NASDAQ instead of S&P 500. And here you can see the market drops down lower. Guys, I hope you enjoyed today's video. I hope you found value as always. If you did, please hit the subscribe button, hit the like button, leave a comment down below. I always reply to every single comment out there. If you are looking to take your trading to the next level and you want me to trade live with you, review your trades, help you with your psychology, help you with your backtesting, help you with your risk management, go ahead and check out the mentorship program. The members are absolutely killing it and getting funded. It is a life-changing opportunity, so take hold of that promotion before it ends at the end of November. I will see you guys in the next video.